So let's talk about this, because I think what we have to do is we have to have a conversation about what happened with the Silicon Valley Bank. Now, we will start there. But before we do, I want you to understand that whether or not you have an account with the Silicon Valley Bank is absolutely not relevant to the matter before us, because the matter before us speaks volumes of the bigger issue. And the bigger issue is we have been staring down the barrel of a bank failure so large that all the king's horses and all the king's men will never be able to put Humpty back together again. This is an important issue to talk about. It's so important that I believe, as I am beginning this discussion, the enemy, and I have no problem saying this, has worked so hard that he is going out of his way to keep this broadcast from going out. I know the way spiritual forces work, folks, and the enemy is working as hard as he can to keep this information from getting out. He does not want the people of God to be informed regarding issues that are absolutely critical to our spiritual growth. He does not want the body of Christ to be informed about the darkness that continues to ensue regarding all of the things that will be playing out in the end times. He absolutely does not want you to be equipped with the spiritual perspective on what's actually happening with the banks and what the beginning of this banking problem is indicative of. And the other thing that he does not want you to know is he does not want you to know just how dark and adverse all of this is to the cause of the gospel. Now, I wanted to lay that out first, because what you are watching is the beginning of what will be the economy of the final Antichrist. So, in order for us to better understand what is happening here with the banking problem, with SVB, I also think we need to be able to explain and define what exactly happened. Because if you cannot explain or define what exactly happened, you are not going to understand the general problem. Now, we should go back to the basics, because I'm going to assume that the average person in this audience, which by the way is not true, because you people are amazing and you have a very good grasp. I have a very knowledgeable audience, right? I don't have an audience of ignorant people. I have a very knowledgeable audience. But what is important for me, at least for purposes of this show, is to carry the assumption that you are not completely familiar with how the basics of the banking system actually works and how it's supposed to work. So here's how it works at its most basic level. People amass wealth. In the amassing of their wealth, what they do is they take their money and they deposit it into an institution that keeps their money in a safe place, right? This goes back to the old Wild West days, where they focused all of their attention on securing buildings that held the wealth of so many people. And if you could give lots of resources to securing those institutions, your money would be a lot safer than living on the Western Front and having somebody break into your home and try to take all your stuff. Yes, bank robberies were a big deal back then, just like they're a big deal today. But the reality of it is banks were designed initially to protect the assets of those who continue to amass wealth as a result of all of their hard work. Now, as the market got more complicated, and as the methodologies that we use to exchange information back and forth, and money for that matter, the sophistication of the necessity for protection of assets grew. So banks stopped taking on the requirement or the responsibility of doing something as simple as providing four walls to protect people's cash. They are now in the process, or started the habit or the process of protecting assets by virtue of making sure that money actually keeps up with inflation, that investments continue to remain sound, and that the protection of the assets entrusted with the bank remains at an all-time high, not just from the perspective of holding on to the cash, but also from the perspective of keeping up with the market. So the idea used to be, which that has changed quite a bit, you take your money, you give it to the bank. The people at the bank are, it's a given that they're going to keep your money and secure your money for you so that it won't be taken away. They have insurances that if they did get robbed, your money would still be safe. But the other advantage that you would theoretically have by putting your money in the bank is that they would invest in a series of investments that would then produce for you an outcome and a result of being able to protect the value of your cash as it sat under the entrustment of the bankers. So let me give you an example of this, right? If I were to have put $10,000 in a bank in 1960, theoretically, if that $10,000 stayed in the bank and the bank did what it was supposed to do, that $10,000 would hold its value into the current year. Now, $10,000 in the 1960s would probably be equivalent to what would be about $120,000 to $150,000 30 years later, 40 years later. And so if you were to have left that money in the bank, then the whole idea would be the interest that you were earning on that amount would cause the number to rise, thus keeping up with the typical inflationary rates that exist. And so if you had kept your $10,000 in the bank, it would still have the buying power of $10,000 in 2020, theoretically. Now, mind you, banks don't typically keep up with interest rates at that level because theoretically, if I had $10,000 in a bank in 1950 and that bank survived a series of insolvencies and all kinds of things, and it did what it was supposed to do, then by the time, if you had not touched that money, by the time you were here in 2023, you should be able to have enough money in the bank to actually buy a house. Because back then in the 1950s, if you had $10,000, you had more than enough to buy a home. So the idea here is that the bank is supposed to protect your assets, liquid as they may be. When we talk about liquid assets, we're talking about cash. When I entrust a bank with my assets, they are supposed to protect it by making sure that it is safe from inflationary mechanisms that would cause the value of that dollar to go down. Inflation destroys wealth, believe it or not, especially if that wealth is not managed correctly to keep up with inflation. This is a very, very important thing. And I want you guys to understand why this is so significant and why this is so important to understand. Because every bank has that obligation. So let's go back to Silicon Valley Bank. This is important. We've got to take some time to analyze what was going on. In the case of Silicon Valley Bank, we have a ton of depositors that give their money to SVB, and in doing so, understand a lot of wealth was amassed. So to give you an idea of what that looks like, in the case of Silicon Valley Bank, $195 billion worth of deposits were made by a series of depositors. Some of those would be venture capitalist firms. Some would be businesses like tech startups or tech businesses. Some of them are just everyday average Joe people who might be working in Silicon Valley that were looking for a bank that they could entrust with their money. And so what they did was they deposited all their money into that bank. And the bank, in essence, at any given moment, because of those deposits, owes any one of their depositors a total of $195 billion. Now, at any time, they could cash in on that requirement. SVB claims that although they have $195 billion in deposits, $208 billion is what they have total. Now that seems as though that's a manageable leveraged number, because you're not going to have all of your depositors go to the bank and say, give me my money back. What you're going to end up doing is you're going to end up dealing with a series of depositors at any given time going to the bank and saying, I'd like to take my $100,000 out, or I'd like to take, $1 million out to pay the down payment on a home. If you live in Silicon Valley, that will be the down payment cost. Whatever it might be, you're going to go to the bank and you're going to basically say, I want this portion of my money that I've entrusted to you so that I can leverage my assets by doing this or doing that. We're going to talk, by the way, about leveraging your assets. If you're one of those people that has money that is beyond the FDIC insurance limit, we'll talk about some recommendations on what you can do to protect your assets. But the reality of it is, you might be in a position where perhaps maybe I was in recently, where after my father passed away, I had to make some very serious decisions on how I manage or leverage the assets entrusted to me from previous generations worth of wealth building. The responsibility given to me as a member of the younger generation by my father extends to his grandchildren, my children, which means there needs to be wisdom in how assets are being leveraged. I can't just simply say, well, thank you for giving me my talent, Lord. I'm going to go ahead and bury it and just assume that somehow in some way my assets will be protected. That's a very dangerous way of looking at things. And folks, if you are listening to me right now and you say, I only got $10 in the bank, this still affects you, and it's going to affect you for a lot of reasons. So you need to listen. So it would normally not be all that big of a deal. Now, if you think about it, when you look at the difference between $195 billion and $208 billion, at any given time, the bank needs to be ready to provide a certain number in their asset base to the people that would be asking, or their depositors that would be asking for money at any given point. Typically, the banking regulation is like a 1 to 8, anywhere from like a 1 to 7, 1 to 8, maybe 1 to 10 number, okay? Right now, you're dealing with a ratio here that's, they're toting the line. You're talking about a 1 to 12, 1 to 15 type ratio. Okay, fair enough. But, excuse me. But what is happening here is that no matter how you cut it, when you have $195 billion in assets from depositors and your total amount of assets that you have is $208 billion, understand the amount owed is considered to be $195 billion. The amount total is considered to be $208. The reality of it is the disparity that exists between 195 and 208 is very small. You're talking about roughly $13 billion. That's not a lot of money to play with or leverage when you have depositors coming to you and saying, I'd like my money. Under normal circumstances where you're dealing with a relatively healthy banking institution, you're going to have a lot more than that to leverage that is liquid in case your depositors come and ask for money. If you start looking at the number one largest banking institution, the one ran by one Jamie Dimon, Chase, their numbers are significantly different. Now, understand the way that they manage their assets are going to be a whole lot more under a scrupulous eye than the way a bank like SVB will, even though SVB stood as the 16th largest. But no matter how you cut it, you are already dealing with a risky proposition. The scenario here is somewhat risky. This is very important, and I want you guys to get this. By the way, Dawn, thank you so much, sweetheart. God bless you. You say thank you for always telling the truth. Let's dig into this for a second, because this is where so many of the errors got made by Silicon Valley Bank. But the errors, I am going to argue, were created by the federal government. They were propositioned, pushed, leveraged, and caused by a federal government that is moving very rapidly into a Marxist and communist direction. By the way, This is something that's being done at the helm of the deep state. And what the deep state doesn't know, or doesn't realize, even though they stand in direct conflict with the globalists, is that they are helping the cause of the globalists by destroying the current condition of the United States of America, which will prevent the United States of America from being the functioning gatekeeper that will keep globalism from coming into fruition. The reality of it is, the reason why that's been the case is because the United States of America has always had an absolutely overwhelming amount of Christians, statistically speaking, which we all know per 2 Thessalonians chapter 2, that Christians being filled with the Spirit of God act as the gatekeepers. We are the real gatekeepers. We are the preserving influence. It's a very important principle to grasp. So we need to catch all this. It's very, very important. So let's back up. 195 billion in deposits. That means that we would consider that to be a liability. At least the way I'm defining it for this discussion, we are talking about $195 billion that belong to the depositors. The bank has a total of 208 billion in their possession, which basically means what they have above and beyond any financial obligation to their depositors is roughly, if you sit down and you do the math, roughly $13 billion, give or take a few dollars. And we're going to talk about FDIC in just a second, but let's talk about how the Silicon Valley Bank became insolvent or went into that direction. Most banks, when they choose to enter into scenarios where they protect the assets of their depositors, do things like create loans that are well vetted, that earn larger interest rates to protect them from the inflationary mechanisms that oftentimes tear down financial institutions. So I'll give you a great example of this, right? When you're in a position where the economy is booming, it could be a fictitious booming as a result of money being injected into the economy, doesn't matter. But when there's a lot of money around, the cost of money becomes very cheap. Low interest for things, very low interest. Understand that. You're not paying a lot for money when you get to the point where there's a lot of money flooding the arena. The value of the dollar tends to drop when inflation takes place because it costs more for something that used to not cost nearly as much. So as a result, the value of the dollar that you're spending every day drops. It diminishes significantly. So what we have to do, and I dare say this word online, but I think I have to, is we have to start with COVID. James, you're bringing up the golden calf here of the globalists and the socialists. Yes, but we have to talk about that. When COVID happened, it may have been the single greatest event that has ever taken place. Not only for people like the World Economic Forum individuals, but it was the single greatest event that took place, not only for the totalitarianists who took advantage of a perfect crisis to create a perfect socialist environment. It was perfect for those people who fast forwarded the Marxist flavor of totalitarianism that this country has never seen. It was not only valuable for the induction of the neoliberalist agenda, including people like the neo-Malthusians and all the other groups of people that contribute to the culture of death. This was their dream come true. They've always wanted this. Brad, you're awesome. I finally figured out how to super chat after 2 years. God bless you, bro. I do acknowledge that. So this was a perfect event for so many people looking to take advantage of ushering in the mechanism of mass psychosis to further enable the effort to gaslight in order to get people to live the type of life that they would normally never live under normal circumstances pre-COVID. The fear of death is a powerful agent. The fear of death is something that is beyond most people's capacity to deal with because it goes to the core of humankind. So you've got that situation. But here is where it really became beneficial. It became big. Let me just say this. It became huge to Silicon Valley. Silicon Valley and any other person represented in the tech industry were the ones that very likely benefited the greatest. Them and organizations like Amazon, but Amazon is big tech. I mean, if you really think about it, Amazon is considered to be big tech. They use big tech to do what they do. Yes, they are a retailer. They are the world's largest retailer. But the reality of it is the greatest beneficiaries of COVID, besides Satan himself, are people like big tech, in which you find tons of in Silicon Valley and Amazon. They're the greatest beneficiaries of all of that nonsense. Let's not forget that. It's something we have to establish here. If we don't establish that, we are going to lose our ability to be able to create the determination variables that contributed to all of this. So COVID happens. The tech industry goes through the roof. Through the roof. Why do they go through the roof? Well, you need Zoom to communicate with people. You need FaceTime to communicate with people. You need the ability to be able to use tools that allow you to stay in your home and be a good old boy while the government tells you to be quiet. Guys, do you even understand that churches that shut down invested a stupid amount of money in the tech industry so that they could comply with the governor's wishes and stay away from the people that they're called by God to minister to? Understand, all of that costs money. I remember, listen, when we were open as a church and still meeting, we saw the need. I saw the need immediately to invest heavily in equipment to be able to broadcast online, live, and all that other stuff. I saw the need immediately. And the bottom line is this: we went out of our way to make sure we made a substantial investment in the tech industry to be able to keep up with the trends that we knew we would be facing. We knew that the radio would be more important. We knew that online broadcasting would be more important. So just like everybody else, the whole world invested in the tech industry. When that happened, folks, understand this. Please don't get this wrong. Don't get it twisted. They made more money than they knew what to do with. The problem is the government, particularly this government, I think Trump had a lot to do with it as well. Don't get me wrong. Recognized that a problem was on the horizon, and that the problem on the horizon was the fact that what they did in shutting everybody down and shutting these businesses down was they taught Americans that there was a different way to do business. And what they did not realize was that the unintended consequence of changing how transactions were done would be something that would hit them harder and faster than anything they could have imagined. And when that happened, folks, it came in the form, get this, it came in the form of substantial income being rewarded to these tech industries. When that began to happen, people in the general population began to recognize just how crazy things had become in the tech industry. And when they saw the opportunity for income, substantial income, it began to flood the market with capital, money, lots of money, more money than anybody knew what to do with. The interest rates were still pretty low. But when that kind of money came into play, the interest rates actually started dropping beyond what most people ever comprehended we would ever see. At one point, folks, you could get a mortgage for a 1.7% interest rate. Understand that, folks, that's free money. That is nothing money. Well, the reason why that ensued was because when the government recognized the fact that there were certain sectors in the industry that were failing, they knew that it would not be sustainable for any economy to have a ruling class that was so extreme, that had so much more money than everybody else. Because the reality of it is, it's the upper middle class, and in many cases, what they would call the lower class that sustains the existence of these larger infrastructures. So what we ended up seeing was what any good, solid, communist, socialist, Marxist organization would do as a government, and that was create a dependency by its people upon the government to receive an injection of income. What happened at that point was people that had no money in their bank accounts all of a sudden had $8, $9, $10, $15, $20,000 in their bank accounts because of tax credits and all kinds of other money that was being given to inject. I had people tell me, I don't know why I should be working right now because the money I'm making on unemployment is more money than I make when I'm actually working. So I'm milking this unemployment thing. When I'm staring at a man face to face who has an obligation to take care of his family, I can't blame him for thinking that way. The government is telling him, if you go to work, we'll take all these benefits away from you. And he says, this is my golden opportunity to take my free time, do the productive things around the house that I know I needed to do, and collect a paycheck that will not only allow me to pay all of my debt obligations, but it will also allow me to create a substantial savings. I'll be ahead. So that's what happened. Silicon Valley Bank is a perfect example of what so many in the banking industry did. And they basically went ahead. Folks, get this. This to me is just unbelievable. They went ahead and they said, okay, instead of going out and doing loans that made up for the potential interest variance, because any prudent bank is gonna actually tell people, look, we're going to start making loans. We're going to protect your assets, depositors, by creating these loans for homes. It will give us the ability to substantiate our value by the use of our possession of collateral in these liens that we have against these homes, and we will be able to protect ourselves from the inflationary problem that we're beginning to see happening on the horizon. Because remember, low interest rates, big inflation, right? When money is cheap to buy, people buy lots of money. That's just how it works. So think about it, folks. Look, if I buy a home for $500,000 and the interest rate on that loan is going to be a 17% interest rate, do you understand that I could buy $1.5 million home and spend less money monthly if the interest rate were 2%? Think about the variable there. And I would still knock out paying it in the traditional 30 or 40 year period allotted to me. And then there were very conservative loan products that were coming out that were being put out by really smart banks who understood the fact that this leveraging would bite pretty much everyone in the rear. And if they did not put out loan products like this, they would not be able to accommodate for the variable that existed in the inflationary rate versus the amount of money they were making back in the interest rate. So banks were actually creating loan products where they would say, hey, listen, for the first 10 years, you're paying interest only. And then after that, you're paying principal plus interest for the next 30 years. Now, those were smart products for bankers. They're smart products for bankers because for the first 10 years, you're making interest only. Then when you start paying principal and interest, you lock in to the prevailing interest rate at that moment, which oftentimes were tied to treasury bonds, and you protect the bank from the interests of someone else that might want to take advantage of the drop in interest while the increase in inflation happens. They protect themselves from inflation. Think about it like this, folks. Like here's the idea, right? If you have $200,000 in your pocket and you are beginning to notice that prices are going up everywhere, right? A dozen eggs no longer costs a couple of dollars. A dozen eggs now costs $12. Your buying power has dropped substantially. How do you protect your $100,000 from the inflation? Well, you look at the assets that oftentimes carry themselves with the prevailing interest rates and the inflation, and you invest in those assets. Perhaps the greatest asset to invest in when you have a substantial amount of money where you could do something like that with is real property. You go and you buy real property. Real property is oftentimes tied to the prevailing interest rates. We look at things like LIBOR. We look at things like treasury notes. There's all kinds of things you look at with respect to interest rates. And when inflation goes through the roof, the value of your home goes through the roof. As artificial as it may seem, if you were to buy a home for $100,000 on that day, and $100,000 in 4 years only has the buying power of $20,000, if you had kept the money in the bank, that's what you would have, $20,000. But if you had taken that $100,000 and you had purchased a home for $100,000, with the inflation and all of the other things going on, when that home hits the 5-year ownership mark or whatever it might be, and inflation has gone through the roof, the value of that home is now $300,000. So if you had kept the $100,000 in the bank, you'd only have the buying power of $20,000. But if you took that $100,000 and you purchased a home, you now have the buying power of $300,000 represented in the equity that exists in your home because of the fact that your home increased in value according to all of the other inflation rates and so on and so forth. Now, some of you might go, man, there's so much here to talk about. There is. There's a lot here. There's enough to blow everybody's brains up. But I'm bringing all of this up because you need to understand what happened with SVB, because we're going to get to the core of the issue in just a minute. And the core of the issue could be something, believe it or not, that will save your life. So please don't allow yourself to be removed from the thought process that needs to ensue here. Okay? So understand what's happening. Now that you understand kind of the basics of everything, we need to take a good look at what happened. COVID brings in lots of money to these Silicon Valley big tech companies, startups, all of that. Most of the money that was unleashed during COVID found its way into the tech sector. Bottom line, Silicon Valley Bank, in essence, lent a huge portion of that money, a huge portion, in hopes of protecting their interests to the federal government of all people. By the way, there was whoever was the person who was assigned to manipulate or manage risk aversion, which there wasn't anybody for months and months and months. What a stupid thing to do. All the banks do it, by the way. This is terrible to say. All the banks do it. But this bank decided that instead of going down the route where we're going to start vetting people, we're going to actually start creating loans that are actually reasonable, where we know we can protect our assets, they decided that they are going to give a loan to the federal government. Now, by the way, I just want to say this. Before everybody loses their mind and says, how stupid can SVB be by giving these loans to the federal government, I want you to understand why in the last 2 years it got way harder to get a loan for a home. We cannot blame banks like Silicon Valley Bank for doing what they did, because the reason why they chose to give loans to the federal government, by the way, in case you guys haven't picked this up, these are through treasury bonds, typically 10-year notes. But the reason why they gave the federal government these loans is because the federal government, in essence, forced them into giving them these loans. Think about it like this. COVID ensues, lots of money floods the tech industry. All that money goes into banks like SVB. And SVB says, we need to figure out a way to manage our assets and to protect it from the inflationary mechanism that's going to be deployed pretty quickly here. By the way, I have so much to say about the Treasury Department, about the Fed, and all the other garbage that's going on right now. They're contributing to the mechanism of mass psychosis that I've been talking about for years. I don't even have the time to begin to get into the problems with that. But let me just simply say this, throwing that little jab in, because I had to throw that jab in. Understand, banks like SVB were faced with, okay, we have to protect our assets from the inflationary mechanism that we know is coming. We know that costs are going to go up. We know that the buying power of the dollar is going to drop, especially because these banks have been witnessing what we all call in the industry quantitative easing. It's a fancy, nice way of saying the U.S. government's printing more money. I told myself I wouldn't get on this issue, so I won't, because that's where I start beating up the Fed and getting on all of the crazy monetary policy that exists. And Trump did a little bit of kick the can down the road on this as well, but I'm going to argue with Trump. He had no choice. He had to do that. Had he not done it, he would have destroyed the U.S. economy. I'm just going to say that, and there's a big reason for that. And I'm just telling you, he had his head on straight when he made those decisions. But let me just stop and simply say, they're printing money. So these banks are saying, wait, hold on. We've got a ton of inflation coming our way because these people are printing money. So how in the world are we going to protect our assets? Well, you would think, okay, let's just make some solid, good loans to homeowners. Wrong. Why? Because Flashbang and his current totalitarian regime in office chose to create a series of laws in the last 2 years that basically say, if I create a debt obligation with you, Mr. Bank, in the purchase of a home, you cannot use, as a bank, the traditional tools that you would use to enforce payment. In other words, you might be the lien holder on my title, but you can't do anything about it. You have to allow me to live in that home for 2 years. And then there's an element of loan forgiveness that has to exist before we'll require them to start paying you for the loan. So think about this, folks. Banks that are wanting to write up loans to people to purchase homes don't see the incentive in doing so because they know there's a significant potential that that person will default on the loan and still be able to keep the asset that supposedly secures the loan. If you don't believe me, there's tons of people that are taking advantage of these programs right now. It's just nothing but pure theft, but it's happening. So the banks are saying, well, that's not really an option. I had somebody come up to me the other day, actually a guy that I really respect in the real estate business. He's a smart realtor. He's probably one of the best in the country, in my opinion. He does something like I want to say sales. I think last year he did 500 million in real estate. Brilliant guy. He's become a friend over the years, over the last year and a half. He says, James, look, why don't we take some of the money that you may or may not have, and why don't we put it into getting some rental property out there? And I looked at him and I said, dude, what a great idea. I think it's a great idea to go buy some real property because real property is the best way to protect yourself from inflation, except for one problem. I buy that rental property today, and tomorrow I collect a security deposit. I do all the vetting that I need to do to make sure that the renters are the right people in the right situation. And in 2 weeks, they lose their job. In the past, that would probably be a 2-month hit for me. You would go through an eviction proceeding, and there'd be all kinds of things you could do to pretty much secure your asset. Which is why if you're ever buying a property and you want to use it for rental, you need to make sure you have somewhere in the neighborhood of about 6 months to a year worth of income to support that asset in case you have a vacancy for whatever reason. No big deal. But that person goes and declares bankruptcy. I don't have the protections that I used to have. You might as well basically say that home is owned by that person for the next 2 years. Why would I do that? Every bit of inflation that I was hoping to protect my assets from by the investment in real property through the use of a rental agreement is lost. By the way, let me just say this. That's changing right now. The government is beginning to realize that even as totalitarian as they are, how absolutely destructive that is, because they eliminate the benefits that come as a result of a booming, thriving capitalistic society. And the tax dollars that they so heavily rely upon begin to be diminished substantially. And the sustenance of the ruling class necessary in order to be able to accommodate that world dies. And it dies a terrible death. So I just want everybody to understand what we're looking at here. There is no incentive by the banks to do a traditional loan because there is a greater potential. If you're looking at risk aversion, there's a greater potential you are going to lose money. It's not going to go well. So then SVB goes and tells its clients, hey, listen, look, here's the deal. We're different than all the other banks. We're not going to be as heavily regulated because we do not rely on FDIC to ensure the assets of our depositors. And as a result, there are greater benefits that come from that, and we can make better investment decisions. So the bank says, hey, wonderful, no big deal. We're forced into this because the government's inflation, they're printing money, all of that. You know what? I'll tell you what. Let's go to the government and let's loan them the money, because when we call them on the money, we might be in a more advantageous position. Sound reasonable? No, it's stupid. Why? Back then, a few years ago, SVB says the interest rates are stupid. They're low. The prevailing interest rate in the purchase of this type of a secured deposit is somewhere in the neighborhood of 0.5%. But the United States right now is selling treasury bonds that are yielding 2%. The problem is you got to buy a 10-year treasury bond. That means you get a 2% yield on the purchase of that treasury bond, but you will not see that yield for 10 years. At that time, buying a 2% treasury, buying a treasury bond, even at 10 years, that gives you a 2% yield is a pretty safe bet. In your mind, it is. All things considered, looking at all the circumstances, that's a pretty good deal. So what do? They go and they buy the 10-year treasury bond. 2-year 2% yield. No big deal, except for one problem. Inflation goes through the roof. 3 years later, inflation gets to levels they never thought they would ever see. Inflation in the last 3 years gets so high that it goes beyond anything we've ever seen in United States history. With inflation that high, the treasury yield or the treasury bond yield for a 10-year goes up to a 5% bond now. So now banks are buying 10-year notes with the 5% yield, which, by the way, would not normally be all that big of a deal. Because think about it, folks. If I buy if I invest in the United States government and I buy a 10-year treasury note, right, that yields 2%, that's a great number. That's not all that bad during that time. When inflation goes through the roof, the way that I make up for it is I go and I now buy the 10-year bond that pays me at 5%. Then time goes by, I buy another 10-year bond that goes up at 7%. And you take the yields from 10%, 7%, and 2%, you mix them up, and you average an interest rate that meets requisitely with the typical bonds that you would get over the course of all of those years, and you end up winning, except when one problem happens. And that's this. People begin to hear that the potential of insolvency is high. By the way, Elena B., thank you so much. You're incredibly generous. Thank you. And they say, I don't know how much further this is going to go. You know what? Just to be safe, I'm going to pull my $1 billion out of SVB. Guy goes to SVB. I want my $1 billion out of SVB. Oh, yeah, no problem. Another billionaire or millionaire hears that and says, why is he pulling out? I'll sit on this and watch it for a second. Then you get the president of SVB who sells $13.5 million worth of stock. He has to publicly disclose that. Then on the same day, another officer sells $500,000 worth of stock. All requisite with the amount of money they have and the stock that they own. Now I'm the billionaire that's been watching things and I go, something's wrong. I'm not going to stick around long enough to find out what's going on. Hey, SVB, I'm calling you on my deposit. Give me my money back. They say, yeah, no problem. Here we go. We have 193. It's no longer 195 million. Now we have 193 million in assets that belong to our depositors. Oh, but now we have a total of 204 billion, not 208. Now we have a bigger problem. The bigger problem is other investors begin to ask questions. The person who's supposed to be looking at risk aversion isn't paying attention, and they say, well, you know what? All of you guys that are depositors, don't worry, because we also invest your money in mutual funds. But what they don't tell you in the small print is, yes, they're investing their money in mutual funds, but they're not investing on behalf of you. They are investing as the bank. So think about it like this. If you are somebody who holds money in a particular bank, I can go to the bank and I could say, listen, I have an IRA that I'd like to establish. And within that IRA, I would like to manage the buy and sell of mutual funds or stocks or whatever it might be. Mutual funds are worthless, by the way. They're about as worthless as certificates of deposit. There's a whole lot of reasons for that, but we'll just leave that be. You can manage one transaction in the stock market if you do it right by studying the stochastics and all the other information that needs to be done. You can turn more in a single transaction than you ever could a lifetime of yield in a mutual fund. But that's a whole other world, and I'm not a financial advisor. I'm just giving you the facts. So SVB says, we're investing your money in safe places. Treasury yields, we know, concern you guys, but here it is. We've got other places we're going to invest in. So they tell their investors, or they tell their depositors, hey, we're going to invest in BlackRock, which they did. Now, BlackRock, we know, listen, they're evil, but they are huge. BlackRock's not breaking, folks. There's no way BlackRock's breaking. By the way, I just want you to know, I can do this show for 3 hours and still not completely get through all the fine details of all of this, which is why we're going to wind this down, but I want you to understand what's happening here. So they say, BlackRock, we're going to invest in you. And then you tell the depositors, the mutual fund that we are investing in for you, one of the major holders to hedge our bets, is going to end up being BlackRock. So then an insolvency variable comes out, right? Monkey, you're out of control, bro. Thank you so much. This is made by monkeys, but should cash justice. I love you, Monkey. I'm glad you're watching. Think about this for a second. They say, oh, we're investing in BlackRock. Everybody says, oh, yeah, no problem. We're happy about that. Now, keep that in the back of your mind. We're going to go back to BlackRock in just a second. We're going to go back to mutual funds in just a second. But just keep that in the back of your mind. Mikey, thank you, homie. Love you, bro. Yeah, Fox Business headline. SVB had more red flags than a CCP meeting, but regulators cared about the climate, not bank risk. That's true. But you know what, Mikey? It's more complicated than that. Way more complicated than that, because the government forced the condition that we see happening with SVB. And this is the problem that we need to talk about, because everybody's going to talk about the woke industrial complex clouding the judgment of SVB. But what people are not talking about, and they need to talk about, is the government is creating this condition in banks. Gavin Newsom, all of this is happening on his watch. This is because there's a lot of corruption going on in how they manage the banks, and it's a lot deeper than them choosing to go down the woke industrial complex. There's a lot more to this, and I'll get into this in just a second because it's very, very important. So keep the BlackRock fact in the back of your mind, and the mutual fund. Just keep it in the back of your mind. Let's go back to Treasury yields. They buy this note. 2 years ago, they buy a note, 10-year Treasury yields, and they spend a poop load of money. We're talking hundreds, probably $50 billion. I think one of their Treasury notes were that significant. Lots and lots and lots of money. These Treasury bonds, again, like I said, pretty typical transactions in bank environments. They go and they do this, and the third billionaire goes, President sells off a bunch of stock. I think it's a CFO that sells stock. A couple of my buddies in the tech industry just pulled their money away. Something is very, very wrong here. Uh-oh. Holy smokes. You know what? I'm gone. So he calls. SVB says, give me my money back. SVB says, are you sure? Come on, man. We're doing great. We got all these investments. He says, no, I want my money. $5 billion business looks at SVB and says, we want our money too. SVB begins to say, oh, caca. Jenna Banana, thank you. You're awesome. God bless you. SVB says, oh no, we're in trouble. Then Jamie Dimon appears. Some of you may not know this story. Jamie Dimon, a full-blown shark. He is a shark, folks. He did not swallow Washington Mutual whole because he's an idiot. He did not survive the insolvencies that threatened his bank in 2008 because he's an idiot. He did not navigate around too big to fail because he's an idiot. He's a smart man, and he's kind of scary. He gets up there and he says, look, folks, you're about to be in big trouble with banks like SVB, Washington Mutual. We have over $1 trillion in assets. We're strong. And I promise you, insolvency is not a part of our category or part of our vocabulary. Come see us. People hear Jamie Dimon talking that way, and they're like, oh, no, we have a huge problem on our hands. Don, thank you. You're so generous. God bless you. We have a huge problem on our hands. And the problem is about to get bigger. So lots of depositors now begin to call SVB. Come on. We want our money. 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 And SVB says, we can handle it. We got this. We got this. This is okay. This isn't everybody. We got this. Pretty soon, SVB says, we cannot wire these requests fast enough. We've got to start selling assets. So guess what? The first assets they go to sell are their 10-year treasury notes. The problem with selling a 10-year treasury note is you're not going to get what it's worth. And you're definitely not going to get what it promises. So let's say you bought a 10-year treasury note and it promised you $1,000 in interest. If you were to sell that note prematurely, you would not be able to sell it for what you would expect in interest. You would have to sell it for substantially lower. So what does BlackRock do? What does SVB do? They say, let's start selling the treasury notes off. We got to sell the treasury notes. We got to sell the treasury notes. So they start selling the treasury notes. They go to other institutions that say, look, man, we got to watch out for our own assets. So we'll be happy to buy those treasury notes. But here's the deal. We'll only give you 50 cents on the dollar. Or 70 cents on the dollar. And guess what SVB says? SVB says, we'll take it. The very moment they say they'll take it, everybody says, oh crap, they're in trouble. And what we have witnessed happened. Now, where do we go from here? Well, we bring in FDIC insurance. Here's the big issue. Let's talk about FDIC for a second. FDIC insurance, yes, the amount that they insure is antiquated. $250,000 is a nothing number for the day in the world in which we live in our economy. But you get to $250,000 insured. $250,000. That was designed by FDIC to prevent bank runs from happening. A guy might be a depositor in a bank like SVB and says, I got $100,000 in the bank. There's a bank run going on right now. I don't have to worry about it. The feds will give me my money back immediately. I have FDIC. I don't have to worry about it. Most people can safely make those assertions because what ends up happening is all of the money that banks have to pay, the fees that banks have to pay, go into a mush pot in essence. And if one bank goes completely insolvent, the depositors that remain within the insured amount will get their money no problem. Might take a few weeks, but they'll still get that money. It will not be an issue. Think about this for a second. They go back and they say, okay. But then here's the problem. The government looks at SVB and says, you ready for a number that's going to scare you, folks? This is going to scare you. You ready? This is going to cause you to poop your pants. $208 billion in assets SVB has. $195 billion of those are all money from depositors. 88% of that $195 billion, we're talking 160 of the $195 billion is not insured under FDIC. Because you've got huge businesses that have billions and billions and billions and billions and billions of dollars in liquid assets in that bank. And let me tell you how much more corrupt it gets. Venture capitalists say, here's the money, SVB, take it. Then you've got a startup company that says, we would like to start doing business here. We'd like to get a loan from you to do the business. SVB says, no problem. We'll give you the loan. So they take the money from the startup capitalists that got deposited. They take that money, switch it into the other hand, and say, here you go. The venture capitalists think that the assets that are held by their bank is safe. It's not. And let's go back. Can we just go back for a second and just talk? Let's just have one quick conversation about something I told you to keep in the back of your mind. That's BlackRock. Anybody who's a savvy investor is going to say, okay, no big deal. Look, I have $14 billion in assets that I have put in SVB. And I have a personal guarantee from SVB that they are investing in BlackRock. That means that my $14 billion in assets is in BlackRock. I can, per the law, go to BlackRock and make a case to get my $14 billion back. That might be at a little bit of a loss, but I can get that back. You go to BlackRock and you say, BlackRock, I'm calling in on my mutual fund. I want that portion of the assets that are managed by you back. BlackRock says, dude, we've looked this up. You're not on the record. And then you begin to go, oh, shoot. You get all worried. Notice I said shoot, S-H-O-O-T. You begin to get really, really worried, and you go back and you look at the agreement for the mutual fund that you just purchased through SVB, and it says in the fine print that SVB assumes the general assumption of the risk. No, they don't say that. They say that when the investment is made, it is made by SVB, and you are not named anywhere in the investment. Now, why is that a problem? It becomes a problem because your $14 billion that they invested in BlackRock is now viewed as an asset of SVB. And when all the other bankers come after SVB, they're going to take that $14 billion that really belonged to you, but is not technically yours because it's an asset of the bank, and you lose. So if you had a mutual fund in the bank, you lose. That is not only, folks, a failure in regulation. It is not a failure in the incompetence of the bankers at SVB, but it is a reflection of a terrible government. I want you to understand something. It is so tempting and it is so easy to blame the bankers at SVB and say they're so busy on the woke industrial complex, figuring out how to do all kinds of things. They've spent $5 billion here and $4 billion there and $3 billion here, and they're doing all of that. And it's so easy to look at them and take the political jab and say they failed because they were so busy being woke. But in reality, the reason why they failed was because their government forced them into failing, because it is their desire to eliminate cash in society. Folks, that's what it really comes down to. And when we talk about SVB affecting you, that's exactly how it affects you. Their hand was forced into that. No one wants to agree with me in this. No one wants to accept it. No one wants to believe me. Because what that would mean is that the problem is far more greater. You ask me the question, what's the bigger problem here? Systemic racism or the systemic breakdown in the economic infrastructure of our country? Systemic racism is on item 300. It's a classism thing, folks. Look. This was created by the United States government. This was created by the United States government. Let me say this again. This was created by the United States government. Now, here's where I have mixed feelings. This is where it gets really hard. Do you bail them out? SVB has $160 billion in assets that are not insured by FDIC. Do you bail them out? How in the world is it even right to bail out a company that behaved recklessly, that banked with SVB, knowing fully what they were getting into? All the people that tell me, well, SVB acted completely recklessly. Oh, did they? Where they went out and they bought all this stuff for, Black Lives Matter, and they did this and they did that and they did all this woke stuff. Was it reckless? I would argue that what they did is actually paying off for them right now. Why is it paying off for them? Well, think about it, folks. The government says, go do this. There are government officials right now that are saying that the failure of SVB, if it is allowed to happen, will set back the agenda of climate change for the next 12 years. Why is it always 12 years, by the way? You ever wondered that? Oh, it's going to set back the agenda of climate change for the next 12 years. Really? Listen, that bank was faced with a decision. Now, is it immoral and unethical? Absolutely. Without a question. What that bank did was immoral and unethical and completely reckless. But they were just playing the game. I bet you any one of those officers could have argued, oh, we did what the government wanted us to do. Because the reality of it is, if we fail and there's an insolvency problem, the government will be the ones that will bail us out. And guess what? They did. If this was a farmer and merchants bank that had podunk citizens off the corner of the West Boonies that failed, the government would say, tough luck. In this situation, they bailed them out. Now, people say, well, was it actually a bailout? Technically, you can't really call it a bailout, even though it kind of is. I have mixed feelings on the whole thing. People ask me all the time, they say, well, James, what do you think about this kind of thing happening? I've been getting this. It's been a question I've been asked the whole week. What do you think about this? I have mixed feelings. This would have been a decision that the Trump administration would have made. The Trump administration would have bailed out this bank. And Trump's not a globalist. Tons of people would have bailed out this bank. Why? Because you almost kind of have to. The free market capitalist in me says let the bank burn. The problem is you let the bank burn and you destroy the lives of not just a couple 100,000 people. You destroy the lives of millions and millions and millions of people, and you set a blaze that you might not be able to put out. So I got mixed feelings. Is that the right thing to do? Hard thing to say. Look, part of me actually says they kind of had to do this. Now, the reason why I have such a problem with all of this is because when you understand the core of all of this, it gets crazy. Folks, I'll say it again. When interest rates rose, fewer deposits came in capital venture funding. Why would they come in capital venture funding? Interest rates are rising. Money's getting expensive. It dries up. And then the market value of all of those securities, they don't just go down a little bit. Folks, they plummet. They blow up. Why in the world would you buy a treasury note yielding 1% when currently with the U.S. government you can buy one at 3.5% at a lower term, a 4-year term? So the person being confronted with the opportunity to buy a treasury note that's yielding 1% or 2% is basically going to say, you're going to pay me to take that off your hands. So if the declared value of the treasury note is $1 billion once it's matured and yielded completely, then I'm going to buy that treasury note from you for $300 million. Why? Because I'm going to make a $700 million profit, knowing full well that me doing so will literally prevent your insolvency from taking place. And the banks will say, we'll do it. Why? Because we know the government will bail us out, because this whole time we've been doing everything the government's wanted us to do. We've given loans that we knew would fail in the form of the purchase of treasury notes, knowing that they're going into woke industrial complex causes. And The bottom line is they are going to make it good for us. And guess what, folks? They did. The United States government made good on their promise and said, this is a rare exception, and all these depositors are not going to lose their money. Now, I think that that's great in one sense because there's some very well-meaning, hardworking people that live in Silicon Valley that, of course, they are not going to lose their money. And that's a wonderful thing. Rhonda, thank you so much. But then I have mixed feelings because there's a whole bunch of firms that knew they were making money off the death of the future and are laughing their way into depositing into another bank. BlackRock, by the way, who stand as great sympathizers for the CCP in China and all that, are also laughing because a declared loss in assets through the mismanagement of those particular funds have no effect on people like BlackRock. First of all, if they lost that money, it wouldn't be a big deal to them anyway because they're so big. But they haven't done anything illegal. So the immoral, unethical behavior of the banking industry is the bigger problem. Now, here's my issue, and this is where it all culminates, right? Because I have a lot of mixed feelings, and I love what Glenn Beck said about this. Glenn Beck was smart when he said this. I think he was wise. He said, we need to prepare ourselves spiritually. The spiritual capital. That's what we need to focus on. I agree. But let me take it home just a little bit deeper, because there's a biblical perspective that we need to bring into the play here. Now that we have a better understanding of everything that's gone on with the banking infrastructure and all that's taken place, you cannot simply look at SVB and just say it was a series of incompetent people that made some terrible mistakes. The government wants you to look at it that way. The media wants you to look at it that way. There are conservative talk show heads that want you to look at it that way because they're using that, which is a huge mistake. They're using that as an opportunity to take a jab at the woke industrial complex, which we already know is terrible. What they don't want you to say is that this failure is a construct of the desire of government right now. James, how can you even say that? Like, how can you make an assertion so wild? Let me make it unwild for you. COVID happens. Economy looks like it's about to fail. The rich get richer. The poor get poorer. The political opportunity arises through the induction of mass psychosis. In other words, I'm going to make a problem for you that's so bad that you'll forget about how good it used to be. And then my solution is going to be a quarter of what you used to have, but you'll love me for giving you the solution. Think about it like this. I steal $100 from you, and I take away your ability to earn any money. 3 days go by, your family begins to starve. Your children are saying, I'm hungry. Your baby's crying for formula. You have nothing. And I go to you, and out of my own pocket, through my retail relationships, I spend $20 to give you all the food your family needs. Now, mind you, I'm the guy that stole the $100. And I go and I give you the food and you go, you're my hero. I love you. You're so great. That's mass psychosis. That's what's happening in the United States of America. So we have this happen. COVID takes place. Terrible crisis. Terrible situation. They take complete advantage of it. It goes really bad. Things get really ugly. The United States government prints money. Quantitative easing, they start injecting and infusing money in the bank accounts of every single person that is able-bodied and willing. They provide the solution that creates the mechanism of mass psychosis. You can comply by wearing your hijabs. We're going to force you into certain medical procedures, all of that stuff. And then you begin to look at the government as the hero because they're providing a solution for you. That's exactly what's going on here. So this is now where the government's at. The government says, all of these people that we gave this money to, we want them to fail because there's too much money out there. And with all that money out there, we are going to do away with our own dollar. And when we do away with our dollar, we want to do it under our terms. So what do? we start increasing the rate, the interest rate. The interest rate goes up. Businesses begin to fail. There's no more free money. Venture capitalists aren't investing. Money starts drying up everywhere. Banks go insolvent. And all that money that the government and the ruling class put out now goes back into the pocket. Literally goes back into the pocket of all of those people that originally gave it to you. The government has successfully given you the $20 after effectively taking away your 100. Biblical perspective on this. We are moving towards the economy of Revelation 13, ladies and gentlemen. We are moving into the economy of Revelation 13. Don't get it twisted. Don't get it mixed up. We are going in a very dark direction. And I don't know what you might be thinking right now in the current moment, but what you do need to be realizing is that it's time to get your house in order. It's time to start thinking about the things that are happening around you. Because, folks, the darkness that we're beginning to see is increasing. And yes, when the darkness increases, the light shines. Make no mistake about it. The light shines in ways we never thought it would shine. And it's an amazing thing. But I want you guys to see things for what it is. The Antichrist will be able to do exactly what he wants to do through deploying mechanisms like this, and we're watching it happen. Folks, Satan knows what he's doing, okay? And so does God. And when the enemy understands how this all plays out the way he does, God, look, let me just say this. God says in his word that we should be expecting these things. It shouldn't be a surprise. When you go to the book of Revelation, the book of Revelation says this. This should not be a surprise to us. Throughout the Old Testament, we see this. I don't want us to look at all of this and say, well, I never expected this coming. I never saw this coming. Folks, we've been seeing this coming forever. You guys understand when we were talking about the potential future insolvencies of banks, people call us crazy? You know, Monkey's watching us right now. He'll tell you this. Multiple times me and him have talked about this. We have talked about things going so dark, so fast. We've done all kinds of things to try to educate you on getting ready. What do? How do you prepare? Here's how you prepare, folks. Look, there's a lot of mixed feelings that people have about this, and I have some mixed feelings because there are things that under normal circumstances, I would completely oppose that the government is doing right now to bail people out, but they have to. If there is any hope for the republic and the economy that it represents, these bailouts have to take place. But at the same time, when we know what the end game is, you almost kind of want to say, well, here it is. The problem is God calls us to be people who fight. Fight for the things that are right. Engage in the spiritual warfare. So, I'm about to say things that are pretty controversial. If you thought I've been controversial thus so far, I haven't even been close to controversial yet, but I'm about to get controversial. Pay attention to the spiritual leaders, folks. Pay attention to your own walk with God. We had the failure take place at the beginning of this show, and I'm going to go somewhere with this. And I like being real with people. I don't really care what people think. I kind of don't. I've kind of gotten to the point where I don't really care. I've been so looking forward to doing this show because there's so much to talk about, and this gives us such an avid example of what's about to happen and the things that we're dealing with. And when our computers failed the way it did and everything failed the way it did, instead of getting my head back in it and going, okay, Lord, we need to do this and just getting my attitude right, I got mad. Literally ticked off. Banged my desk a few times. And what I wanted to do is go, like a snowflake. I think by the third time in my anger, when I banged my desk, which is stupid, by the way. I don't know why people do that. The Lord just convicted me. And he said, wait, you're about to engage. You're already engaged in a spiritual battle. And you're allowing the constructs of the flesh to control you. Do you think for a second you're going to be effective in allowing your heart and your mind to be maneuvered by an action that doesn't please me? What are you going to do by banging? You're not going to do anything. You're going to contribute to the mind and the heart of the flesh. That's what's going to happen. You're going to make things worse because your mind and your heart is not prepared. You're not ready. You are allowing the enemy to kick you in the rear, and you're basically opening it all up and saying, come on, get me. Now, I bring up that illustration because it is, as Monkey just said, it's a crack. And when there's a crack, the light shines through and it shows that there's a problem. There's an area in my walk that has to get fixed when I allow that emotion to control how I run things. Now, that's an issue between me and the Lord, and obviously a million people at this point. But I'm bringing it up because I'm saying that what we are witnessing right now is an all call from God to say, get your act together. Let me start first with the spiritual leaders. I've been so disappointed lately with so many of the spiritual leaders I've been watching. I've been so discouraged. I'm hearing about guys getting drunk and getting arrested for drunk driving that are supposed to be pastors. I'm looking at guys that are popular in the prophecy circle, not allowing the word of God to be their full and whole counsel. I'm looking at guys that are lying their way through their ministries. They're complete fakes. They're hypocrites. I'm looking at alliances being made between people who are doing whatever they can to bring in the greatest numbers. I want more subscriptions. I want more recognition. And we are watching people getting themselves ready to get their butts kicked. You know how many guys I know of right now that are messing around with things like porn or cheating on their wives? Or how many situations I'm witnessing where guys are not condemning simple things like homosexual activity? Or how about this? This is terrible. How many guys right now that are in the ministry that are escaping with alcohol or drugs of some sort? That's the direction we are going in the last days. Look, there's a lot of people. Don't be deceived. There's a lot of people who will share all the headlines and say, hey, look at all this. Look at this bad thing. Look at that bad thing. Look at this bad thing. Look at that bad thing. And yet they're not allowing themselves to be submitted and yielded to the discipleship necessary to come to the conclusions that we need to come to. And that's this, folks. Everything that we're seeing is spiritual. When you stop for just a moment and you begin to unpack everything that's going on in Silicon Valley, listen, for every fact I've shared with you, there's hundreds and hundreds of them I have not talked to you about. What I would love to do with each and every single one of you, I would love to educate you with what I know, with the analysis of the market, and start to look at charts where you begin to see market reaction. You look at the stochastics, you begin to see long-term projections. You start using Fibonacci numbers. I just butchered his name. to determine calculations for projections in the future. Folks, every indicator that we get is showing us of what's happening. And yes, Mikey, you're right. It is safe to consider the collapse of SVB a type of mini black horseman. We're seeing many instances of Revelation chapter 6 happening all over the place. It is the beginning of an economic collapse, the likeliness that the world has never seen. Guys, you understand that when the Great Depression happened in the early 1920s into the 30s, when that whole thing happened, a lot less happened to the banking system than what we've been seeing in recent days. A lot more capital involved, a lot more damage is happening now without the results that we saw in the 1920s. That's because there's a lot of mechanisms put in place. That's because, ready for this, digital management of currency regulation. They're going into this, folks. This is happening. They are going into digital currency. My thing is this. I want you to pay attention to the spiritual. So the first call, the first thing that I want to bring to your guys' to your attention is get your homes in order. I know that lots of guys in the ministry, some guys listen to me, others don't. But for the ones that do, especially for those of you that need to get your lives right, repent. You know, it might be painful to deal with the addictions and the things that are destroying you right now. But if you deal with them now, the benefits that come as a result are so substantial that you won't care about the hardship that you experienced in the initial phase. My first call out is to the spiritual leaders. Get right with God. My next call is to all of you guys, you warriors. Get your homes in order. Now, don't get me wrong. You need to be prepared, right? And we're going to talk about that. We're going to talk about preparation. As a matter of fact, it's very likely that the show that we're going to do for Friday will be a premiere that we air, and we are going to talk about practical ways to prepare for what we know is coming on the horizon. I'm going to make an assertion that most people don't understand, nor will they ever understand until they understand the facts of what I'm saying. And that's this. You will never be able to prepare in the physical if you are not prepared in the spiritual first. You can do all you want to save up your beans, your food, your money. You can buy gold coins. You can do all that stuff. None of it will matter if you are not ready spiritually. The first call is to get ready spiritually. If your house is not in order, we have a bigger problem on our hands. A much more bigger problem. It's time to get right with the Lord, folks. That's the all call. That's what's supposed to happen. If we don't do that, we're in bigger trouble than we think. Here's the last thing I want to say. Everything that you are watching right now, I'm going to say it one more time. Everything that you are watching right now are all indicators of the heightened spiritual activity that's taking place that very few people want to acknowledge or very few people want to recognize. The spiritual activity that is happening right now is all the very thing that's contributing to the destruction that we're seeing around us. And until we recognize that, we're in big trouble. It's time to get it right, folks. The only thing that I can say is this. This is a precursor to something much bigger. By the way, this is different from what happened in the Great Depression. This is different from what happened in the 70s. This is different from what happened in 85 or 87. This is much different from what happened in 2008. What we are seeing right now is the beginning of a systemic collapse that we are not going to be able to deal with unless the spiritual is corrected. Time to get our hearts, our minds, and our heads straight, folks. Christ could come at any moment. And until we get the horizontal put aside as a secondary, only to the vertical, we're going to be in big trouble. We've got to put the Lord first. It's that simple. All right. I think that's a great note to end on. Jesus is God, forever blessed. Thank you. You say our Lord is at the door. Amen. He is. Guys, I want to tell you this with the spiritual leaders, the guys that are teaching Bible prophecy, the folks that are out there putting a lot of this stuff out, hold them accountable, please. Okay? Hold them accountable. Demand of them that you see spirituality first. That includes me. Demand realism. I'm no good to you guys if I allow my flesh to take over. I'm no good at all. I can't do anything void of the help of the Spirit of God. And if I do things that discourage the work of the Spirit of God in my life, we're not going to make this, folks. We're done. This is over with. All right, let's pray. Father in heaven, we just thank you, Lord, for this time together, Lord. We thank you for the education you've given us, Lord, for the open opportunity we have to learn more of you. Father, one thing is certain, you are good, you are amazing, and we thank you, Lord, for the goodness that you continue to show us. Thank you, Lord. We love you. Go before us. Fill us with your Spirit now. In Jesus' name we pray. Amen. All right, you guys, love you. This will be my last opportunity to do this as a shout out, but y'all need to embarrass Dale. It's his birthday tomorrow. He's one step to getting just a tad older. So happy birthday, Pastor Dale. We love you. All right. Love you guys. God bless you. See you on Thursday with Monkey. That's going to be a good one. You guys don't want to miss out on this one. Yeah. Anyway, lots of spiritual attack happening, by the way. Lots of spiritual attack. So get ready. We got more coming. Not more spiritual attack. Well, we do have more spiritual attack coming. We got more great stuff coming. Thank you for all your support, guys. We love you. Share this video with other people. We will edit it just to make sure that the portions that didn't go through get taken care of. We'll make sure we upload it correctly, okay? Love you guys. God bless you. Keep fighting the good fight.